Hey guys, what's up? Alec back with the daily stock market, and we had a fairly flat day in the markets on Friday, but overall we saw more red than green on individual stocks. We saw Tesla up 1.9%. ATVI, Activision Blizzard, was one of the biggest movers after hours, up 3.2%. We will be talking about ATVI, Microsoft, and Sony stock in the next video, but in this video, we have an anticipated earnings week coming up. So we're going to talk about earnings in this video and some interesting stocks like Tesla and Netflix reporting on Wednesday after the close. All right, so without any further ado, let's dive right into this calendar, see what stocks are reporting, which ones are interesting, and which way they might be moving. Before that, just hit the thumbs up, subscribe on YouTube. It's the only place to find the full-length videos. Now, Tuesday before the open is a very boring day, needless to say. We have some banks reporting before the open on Tuesday, like Bank of America and Charles Schwab, Morgan Stanley, PNC. So that's really going to be the main focus of Tuesday is the banking stocks. We already saw JPM report earnings, so we kind of know what to expect for Bank of America. Okay, now after that, we have Wednesday before the open. We have Goldman Sachs, which is similar to a banking stock, U.S. Banking Corp, Ally Banking. So more banking stocks are going to be reporting before the open Wednesday as well. Now, Wednesday after the close is where it really starts getting interesting. We have Tesla reporting earnings, which is going to be extremely scrutinized and anticipated. We have Netflix reporting. We have United Airlines. We have IBM. We have Las Vegas Sands Company. We have Discover Bank. And then Tuesday before the open, we even have TSMC, which is a huge and exciting semiconductor stock to be looking out for. We have American Airlines reporting before the open on Thursday. We have Johnson & Johnson reporting before the open on Thursday. We have more banking stocks reporting Thursday before the open and after the close. And then Friday before the open, we have American Express as the most notable company reporting on Friday before the open. First up, let's talk about Bank of America that's reporting Tuesday before the open. They're currently sitting at $29 per share, down 1.8% on Friday. And that's interesting because their biggest competitor, JPM, Morgan Chase, was down also. Remember, they were up in the pre-market when they reported earnings, their good earnings, but nobody really got to cash in the benefits of that because they went down around 2.2% after reporting their earnings. And you might ask, why did the stock go down even though we saw the earnings come out very strong? We had expected EPS of $3.99, and they came in at $4.75 on their EPS. So here we see an interesting article saying banks just started reporting earnings, what they're signaling. There may be worries over the path of the economy, but it has yet to show up in bank earnings. Profits surged for JPM and Wells Fargo during the second quarter as higher interest rates continue to be a tailwind for many of the nation's largest lenders. So it could be a good thing for Bank of America earnings. We could see a beat on a Bank of America earnings. Keep in mind, Wall Street was a little skeptical going into banking season. An analyst forecasted a 7% drop in earnings per share as banks contended with customers who faced continued pressures from inflation as well as higher interest rates, creating an unfavorable climate for deal making. So far, these fears have yet to materialize. Okay, banks have seen an increase in net charge-offs, the portion of debt believed unlikely to be repaid compared with a year ago, but executives said Friday levels were more consistent with pre-pandemic economy than with a recessionary economy. Okay, so that's a huge, huge sentence. Go back and reread that sentence again because it's very important. Executives are seeing that right now, the levels are more consistent with the pre-pandemic economy and not that of a recession economy at all. While there are still plenty of banks, large and small, to post financial results over the next 2 weeks, which we went over in the beginning of the video with the earnings calendar, the early read for the sector has been positive. JPM notched a 67% jump in profits year over year, which was helped in part by its acquisition of troubled First Republic Bank in May. So it's not going to be an apples to apples comparison for JPM and Bank of America. But Wells Fargo saw its profits climb 57% also. Citigroup, for example, fared less well, posting a 36% drop in profits, but that was due more to a slump in deal making than a troubled consumer. Its results still topped the Wall Street's estimates. So again, Bank of America, we could definitely see a beat coming from Bank of America. So remember, large banks are pretty much the safe haven right now after the banking collapse ensued. So JPM, Bank of America could be some big winners during this earnings season. And also just buying Bank of America for long term could be a good idea. They're at $29 per share. They were back closer to $50 per share in the past. And from all-time highs, they're still down around 40%. So dollar cost averaging under $30 per share could prove beneficial for Bank of America. Remember, their price to earnings ratio is 8.76, implying that you're getting an absolute deal on Bank of America right now. They're also a dividend stock paying a 3% dividend. And if we see kind of how that compares to JPM, we scroll down, the price to earnings ratio in JPM is 11. So they're both extremely good deals. However, Bank of America is implying that it's a little bit better of a deal right now, just based off the PE ratio, and also paying a better dividend yield as well. Now, Tesla is a very anticipated stock for earnings. They're currently at $281 per share. And it's interesting because if we go to the last 3 months, we can see that a lot of the positive results that have been happening with Tesla is probably priced in already because it's up 51% in the past 3 months. However, what's not priced in right now to Tesla stock is the guidance that they're going to be reporting for this quarter. So in my personal opinion, the guidance that Tesla is going to be giving during this earnings call is the single most important thing to be watching during this Tesla earnings season. Okay, so with that in mind and with that considered, I think that they're going to also be delivering great guidance. So I think this earnings season, Tesla can push closer to that $300 per share. We can see that it was a resistance last year around this time. Okay, we could see on August 2nd, $307 per share. August 16th, $309 per share. And then September 19th and September 20th, $310 per share. So in my opinion, I think Tesla is going to push above $300 per share and test that $310 resistance once again. And if the guidance is so good or there's a surprise announcement at the earnings, then that could be enough gas to push Tesla above $310 per share and break that resistance. One thing that could be focused on this earnings call and earnings season for Tesla is the Cybertruck is now rolling out. Okay, analysts detail the EV pickup truck could be priced versus rival offering from Ford and Rivian. Nearly 4 years after the first official announcement of the Cybertruck, this weekend was the first time that production rolled out for the Cybertruck. Okay, on the production line. And it's kind of funny how they're rolling it out this weekend and they're reporting earnings next week. So that could be a good sign that guidance is going to be really well for these Cybertrucks, because they could have easily waited till they posted their earnings and the earnings season is over for Tesla and they reported earnings, and then they could have announced the Cybertruck after. But obviously Elon Musk knows what he's doing. He's getting excitement for the Cybertruck a little bit before the earnings, and he could be announcing a surprise on the earnings call about guidance for the Cybertruck, which could skyrocket the stock or at least get it above that $310 per share. So again, remember guidance, watch guidance, be prepared for also the Cybertruck guidance as well. A lot of people are going to be playing the rumor and selling the news, buying the rumor, selling the news. So remember, they are reporting Wednesday after hours. So we could even start to see Tesla stock gaining momentum Monday, Tuesday, and Wednesday before they even report earnings. Netflix is the next stock we have to talk about, reporting earnings Wednesday after the close as well. And we can see that in the last 3 months, it's a very similar story to Tesla, up 30% in the past 3 months. But what's even more impressive about Netflix stock is if we go to the past year, they're up 152%. So as you can see, sitting your money in your bank account, your checking account, your savings account is a very dangerous thing to be doing right now. It's actually more risky than investing in stocks, because if you're not investing in stocks right now, then you missed out on an easy 152% gain on stocks like Netflix, on stocks like Apple, on stocks like Meta platforms. Okay, there's a lot of Nvidia is another good one. There's been a lot of safe stocks and exciting stocks that consumers want to invest in, that have just produced massive gains in the past year. And this isn't even the top yet. We could see a lot of people starting to FOMO into the stock market once they start realizing this over the next 6 months, and pushing the stock market and these individual stocks I'm talking about even a little bit higher. Okay, Netflix, this is going to be the first time that they're reporting earnings since they actually discontinued the password sharing, which could be a bullish thing for their earnings outlook, because they could have more subscribers than ever before. We can even see that this article is backing that up. Netflix is positioned well for profitability boost with the ad-supported tier and the password sharing crackdown, analysts say. Okay, so if we scroll down, an analyst is saying that they have an outperform on Netflix with a price target of $475 per share in the next 12 months. Also see that the analyst is saying that the company can generate significant more free cash flow than its guidance suggests, which is super, super bullish for earnings. Netflix remains one of the analyst's best ideas on the list. He thinks Netflix has reached the right formula with its global content to balance cost and generate increasing profitability. At the same time, its ad-supported tier and password share crackdown could further boost its cash generation, not only leading to amazing posting earning results, but it can also lead to great guidance, or Netflix coming on their earnings call and raising their guidance because of these reasons. The analyst thinks Netflix is well positioned in the murky environment as streamers are shifting strategies. So the ad tier subscription could continue reducing churn and attracting new subscribers. Given its strong viewership and brand recognition, the analyst thinks that Netflix can hold on to its industry high CPM despite the challenging advertising market. The analyst's positive thesis on Netflix partially relies on the password sharing crackdown, both A, driving ARPU, average revenue per user, higher, and B, driving subscriptions higher as well. Recently released antenna data shows a significant spike in subscriber growth. Netflix may have included these additional out-of-house subscribers for $7.99 per month each add-on subscriber. So if you have a Netflix account and you want to share it with, you know, your mom or your brother that lives in a different state or just in a different city, or just not at your house in general, in a different household, then they can add on to your subscription for only $7.99 a month for each additional subscriber, which is an amazing idea by Netflix, and that's going to be showing the increase of subscribers. So overall, it is going to be an exciting earnings week in the stock market. And if you're not in the stock market, then you're losing out on money at this point. And if you want to see exactly what I'm buying before earnings, calls, puts, strike prices, expiration dates, if you want to get into my private trading group with now over 1,000 positive testimonials and success stories, click on success number 9. Read through some of these positive testimonials. On Friday, we've had such a successful day in the stock market with over 48 success stories coming just from Friday. So feel free to go over that with yourself. Go through the success stories, read through some of them. I want you to be the next success story. So DM me on Instagram to join that list. Get prepared for this earnings week. Now is a phenomenal time to join. So thank you. Other than that, thank you guys for all the love and support you've been showing on YouTube. Just smash a thumbs up and subscribe on YouTube, because that's enough for me at the end of the day. Share this video with a friend if you thought it was a banger, because you know it was. And thank you guys. I will see you in the next video. Remember, don't time the market, buy the market. Peace.